What's up, everyone? It's Scotty with MoneyVest. So I've got something very interesting for all of you. So what we're going to do is we're going to basically do a random stock generator in the S&P 500, and then we're going to use that stock and analyze it on our MoneyVest platform. So hope you are doing great and are ready for this random stock analysis. As always, make sure that you drop a like, and if you want videos just like these, let me know in the comment section down below. It's a little bit more fun and more exciting. We just never know what we're going to find with this random stock generator and what type of analysis we can do. As always, make sure that you drop a like, subscribe to the channel, and again, if you want to get access to our entire MoneyVest platform, link's going to be down below. I've just been debugging the entire platform, and we are very excited for the launch here happening on July 8th. Right now, there's a 51% discount that you can get. That's a special price that you can lock in forever, and of course, all the additional features and tools that are going to be added over time, you will never have to worry about it. And again, link's going to be down below. We'd love to have you on board. So this right here, we've got 503 companies that are part of the S&P 500 over here. And what I'm going to do is I'm basically sorted this by alphabetical order, and we're going to spin the wheel, and whatever stock comes up, we're going to analyze it on our MoneyVest platform. So let's do this. Now the wheel is spinning, and again, we've got over 500 companies in the S&P 500, and we'll see what stock gets picked so that we can analyze it on our platform. So we got QRVO. I don't even know what that stock is, but let's just look it up. QRVO is going to be the company. So that's going to be Qorvo. That's actually quite interesting. So they are a company that provides semiconductor solutions for RF and power. The company is headquartered in Greensboro, North Carolina. Currently employs over 8,500 full-time employees. The firm operates through segments related to HPA, so high performance analog, connectivity, and sensors group. So they belong to the semiconductor industry. I'm assuming they're actually doing really well. So if you take a look at the 1 month chart here, yep, so they've gone from just about $97 to well over $115. So that's about almost a 20% increase in the last 1 month. And year to date, the stock is also up. Started the year back in January about $108. Right now trading at just over $115. So not a huge gain, but they are still green and of course up on the year. So if you come over to the MoneyVest metrics, and let's take a look at their last 5 years worth of analysis. I mean, revenues have gone from 3.2 billion to well over 3.7 billion. So that's about a 4% CAGR. That's a 4% CAGR for the company. If you plot this number, that's not a lot of growth for a semiconductor company. And also it's been a little bit more stable, I would say, over the last 5 years. If you come over to the last 7 years worth of data, again, it's been more or less stable. I mean, they haven't really gone anywhere. It's only a 3.16% CAGR, so very, very stable. If you plot gross profit, operating income, and net income, seems like they were, generating loss back in 2018, then turned the corner towards profitability, and then last 3 years they've just been declining in profitability and now going towards a net loss in 2023 of over $70 million. And 2024, actually, 2024 fiscal year, $70 million loss. 2023 was $103 million profit. And then prior to that, just over $1 billion in net income as well. So it's been declining a little bit. But revenue-wise, it's been also coming down and more or less stable. When it comes to margins, we've got compressing and worsening. It does actually really poorly on the profitability table, only a 1.33 versus a 5. So if you plot gross margins, operating margins, net margins, you'll notice that it has been, increasing prior to 2022 and then declined rapidly, especially operating margins have gone from 26% down to 5.6%. And then we've got the net margins going from 22% down to 2.89, and then negative, of course, in 2024 because, of course, the net loss of $70 million for the business. Everything else seems to be a little bit more on the stable side. Return on assets last year negative, return on equity negative, return on invested capital 4.89, which is slightly higher but lower than the average of 7.29%. Then we got return on capital employed 7.79%, a little bit lower than the average. It scores about a 3.2 in efficiency out of 5, so that's also, I would say, okay. The only good thing going for this company, I guess, is the stock-based compensation. So that is actually quite less compared to the percentage of revenue, operating cash flow, and free cash flow. So if I plot these three metrics over here, you'll notice that it's increasing a little bit, and that's probably one of the reasons why we've seen a little bit of a decline in operating income because of those non-cash expenses. So again, 2022 is really when the acceleration happened. It was at sub 10% to now sitting at well over 17%. It's almost doubled in stock-based compensation as a percentage of revenue, free cash flow, and operating cash flows to over 14.5%. It's gone from almost 8%. So again, almost doubling, and a percentage of revenue 1.8 to sitting now at over 3.2. So again, almost doubling here. So that is somewhat stable and efficient because it's still less compared to some of the other companies out there, but it has increased quite a bit. Now, when it comes to their financial positioning, they've got cash improving at 8.8% on average over the last 7 years, but debt is increasing at a much faster rate because that's up over 10.4%. And as a result, they've gone from net debt of about $836 million, $314 million to almost $1 billion. And this right here is their net debt positioning. It was the best it was back in 2018 because that's when they had the most cash relative to debt. And of course, in recent years, they've seen the debt increase to now almost $2 billion, cash sitting at $1 billion. And that 2018 was kind of neck to neck. They haven't really had more cash than debt ever in the last 7 years, at least. If you go over the last 10 years, I don't know if they've got fundamentals for past 10 years. So yeah, so prior to 2018, the last best net debt was back in 2015, where they had negative $548 million. They had over $540 million worth of cash and literally no debt back in 2018. So they've taken on more debt. Their stock-based compensation as a percentage of overall free cash flow, operating cash flow, and revenues also increased significantly for the business as well. So coming over to the valuation piece of the business, let's take a quick look on how it's trading. So since they didn't have profit last year, so they've got negative earnings. That's why PE cannot be calculated. But based on price of sales, they're trading at around 2.93, averages been about 3.5. So yes, you can make a case for it being cheap. Price to free cash flow at 15.6. I'll take a look at the stock price and how it's done over the last couple of years in terms of price performance, but 15.6 is where it's at. Then you got price to operating cash flow at 13.25, price to cash a little bit over 10.4, average been about 13.8. So you'll notice the valuation has most certainly come down. I'm assuming the price has not done super well. I could be wrong, but let's take a quick look here. So QRVO, $115 a share. So there you go. It's been mostly consolidating sideways. Looks like we have analyzed the stock in the past. Maybe there's been some analysis on a live stream or something, but it has obviously come down from its highs of 2021 to now trading at just over $113. So it's down 42%. And as a result, the valuations also come down, as you can see over here on this chart. Now, going over to the fundamental analysis, you can already plot a lot of really cool things over here if you wanted to. If you take a look at the last 8 quarters worth of revenue, gross profit, operating income, and net income, you'll notice a very similar trend that it's not really, growing. It's not really moving higher, but it's more or less inconsistent and unstable in terms of how profitable or how revenue trajectory looks like for this company. I'll give you a very simple example. You compare Nvidia, obviously the top of the food chain when it comes to semiconductor, and if you come over to fundamental analysis for this, this is what the company's revenue looks like. This is what the company's gross profit looks like. This is what the company's operating income looks like, and then net income and EBITDA looks like. Everything is just straight up moving in the right direction and pushing higher, right? So you can't make the same case for, of course, QRVO. So, it's a little bit more unstable, I would say. It's a little bit more volatile, and it's hard to predict really, what the future looks like for this company. So if you come over to analyst estimates, we've got a hold rating among 30 ratings on Wall Street with a high target of 134, low target of $82, and an average price target of 112. And if you come down, annual growth rate for the next several years out, when it comes to CAGR, so we can't calculate because of the fact that 2024 was negative, but looks like they're expected to increase to $6.16 to as much as $12.39. So that's going to be about 100% increase over the next several years out. And then if you come down a little bit, you'll notice the revenue is at $3.7 billion, expected to increase to $5.4 billion by 2029, and that's going to be a CAGR of 7.6%. So let's just confirm some of these numbers in terms of analyst expectations here. So again, you can see a very similar data that I just showed you, negative $70 million in net loss. Prior to that, $103 million, just over $1 billion in net profit. Prior to that, if you come over to, again, income statement, and we go over to annual 2022, net income was just over $1 billion. So that's exactly what we talked about. When it comes to earnings, if you go to annual, Again, $6.06 expected to increase to almost $8, and then of course $9.66 for the business. So I'm gonna guess that is going to be an expected compounded annual growth rate of give or take 12 to 14%. So if you come over to the analyzer tab, come over to the discounted earnings multiple model, and if you hit autofill, so again 12 to 14% is the growth rate. But since we had a net loss in 2024, we can't really forecast what that number is going to look like down the road, but we do have discounted cash flow. So if you hit autofill, last year the company generated $705 million worth of discounted cash flows, or in other words, free cash flows. And if you're forecasting for the next 5 years, the compounded annual growth rate for QRV over the last 5 years has been 3.67%. If I'm being a little bit more optimistic, let's just go with 8% in compounded annual growth rate and about a 2% terminal growth rate beyond the 5-year period, 12% discount rate, 10% margin of safety. And by the way, I actually forgot to mention that one of the really good things about this company was probably the share buyback. So that's actually excellent for QRVO because they are buying a lot of shares back. So 3.71% in shares outstanding, that's actually going down. So you can see the consistent decrease in shares outstanding. So that's good. And that's about a 3.71%. In the last 5 years, it's been a little bit more aggressive at 5.2%. So they've been buying back a lot more shares. So coming back over to DCF, and if we plot, let's say, a 8% growth rate and then a 2% beyond the 5-year period and negative 5.2%, if you hit calculate, you'll notice that there is about only a 2% difference for this stock in terms of its current share price and where the intrinsic value sits. If you come down, that's the sensitivity grid, again, based on your analysis of the growth rate and the terminal rate. This is where the fair value would be. But be mindful that I am expecting about an 8% growth rate. Last 5 years have been about 3.6. So if you lower this number down to 4, you can actually see this on the sensitivity grid as well. So if you lower this down to 4% and keep the terminal rate the same at 2%, the fair value would be at $96.03. We can confirm that by hitting calculating again, and $96.03 is the number now, and that is going to be the fair value based on a 4% growth rate and a 2% terminal growth rate for this stock over the long term, and that makes the stock overvalued by almost 17% with a fair value of just under $100 per share. So coming back over to the analysis on the stock itself, we've got a huge resistance for the stock here at around $120. So that is going to be a resistance, and a massive support seems like over here at around $77-$78 per share. So that would be a reasonable support to watch for QRVO, but a lot of consolidation sideways. It's just been, somewhat making these higher highs and a little bit of those higher lows as well. So that's good. It's still moving in that uptrending channel, but we got a huge resistance coming up at close to $120. So this is a stock that unfortunately in the last 1 year is only up 18%. So it's not really participated in the semiconductor rally as many other companies have. This is a company that, in my opinion, eventually could get kicked out of the S&P 500, especially when you've got not a lot of growing revenue and profitability, also declining down to net losses. Balance sheet's not that great. So this would be a hard pass at the moment, but from a technical analysis standpoint, we've got some decent support at $77 with a resistance up to $120 for this stock. So hope you all enjoyed this video and a complete update on this stock. Again, random stock generator. We're going to do more of these types of videos to kind of help you better understand, and it's going to help you, for me to also better, help you educate and understand, entire platform and showcase the power of what MoneyVest can do. And of course, over time, we're going to be adding more and more features and more functionality for you to also access at no additional cost. If you want to lock this price in, 51% discount where you can do full fundamental analysis on individual stocks, complete macro dashboard that's also going to be built over time. So as always, happy investing, and I'll see you all in the next video.